Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, if you've been watching the market at all, you see this has been a pretty wild ride over the last, let's say, month or two. And you can see we're kind of all over the place, right? Down and up and down and up. And so we've been in a range, but it's been a pretty wild range. And if we look at the NASDAQ, well, actually, before we leave there, you can see because it's been so kind of crazy, you can see volatility has been increasing the whole time. As volatility-based traders, we actually love this. So this is working in our favor if we decide to make trades in the indices. This is the S&P 500 where we always start our look. Next up is the NASDAQ, which is the tech stocks. Similar story, but it looks like it's a little bit lower overall. It's been a wild ride, but it's been kind of more of a downtrend over the last few weeks. Volatility as well been increasing because of this. And if we go to the Russell, which is the small cap, this one seems to be hanging pretty tough, right? It's pretty much near its all-time highs. Volatility is still high because the market overall tends to kind of lump together. When most of the indices are volatile, everybody gets nervous kind of everywhere. So even though this has been pretty strong, you can see volatility is increasing here as well. People are getting nervous. So what are we going to trade this week? We are going to go into silver. And this has really been a crazy ride. You can see this went straight up for months and then took a huge dive right here. And it's been kind of hanging out in this area ever since. Because of that, volatility is also high. You can see it's been pretty crazy way up here at 67, which is way higher than the market as a whole. So I'm going to give you a couple numbers here to look at because I'm going to show you a different kind of iron condor trade. It's called a skewed iron condor. So what I'm going to do here is I'm going to put my cursor here because I feel like this is about where it's kind of bottomed out, right? It tanked, it's been bouncing around, but kind of around this area is kind of where it seems to be like the bottom. And you can see that's around 68 bucks. If you look over to the right-hand side, you can see right here, 68 bucks is kind of like around this bottom of where it's been. So that's kind of my bottom. And over here, you can see the high was 109. But really what we want to look at is this. I'm going to go right here to this day where it kind of reached its all-time high. And if we look up here, you can see on this particular day, which is what the one I'm doing, where it reached a high of 109.83, it obviously had a huge bounce around day, but it closed at 105.57. So the highest close it ever had was basically around 106. So the high really means nothing to me because it didn't close there. It hit a high, but when it closed that day, it closed at around 106. So 68 is about the bottom I'm looking at, and 106 is kind of really where I'm looking at as the high. So if I go to the trade page, I'll get to this in a second because it's obviously a lot of moving around. I'm going here to 54 days, the monthly expiration cycle. It'll be 53 tomorrow. And I'll go back to the chart here so we can look at this together. I just showed you the numbers. So 106 was as high as it ever got on closing. So because volatility is so high, I can do something called a skewed iron condor, which means the price is around, let's just say $77. I'm going $9 down on the put side, but you can see 77 means I'm $30 away on the call side, meaning I'm skewing this upwards. I'm making an assumption, purely my assumption, that we're much nearer the lows and the highs could potentially go higher from here. So I'm still leaving some room. I'm still leaving $9 for it to kind of go down to this area, but I'm expecting over the next 53-ish days that it'll kind of maybe bounce around, but probably start heading back up. And I'm leaving a lot of room on the upside because I can. I can create this iron condor where it's closer on the put side, but still $9 below, but $30 above on the call side. That's called a skewed iron condor. I'm skewing it upwards. I'm bringing the put side closer and leaving much more room for it to run on the call side. And because, again, volatility is so high, I can do this $2 wide call spread and this $2 wide put spread. And as long as I collect at least 66 cents or more, this trade is perfectly fine. And you can see I'm collecting way more than that. So I could make this wider even if I want to, but I feel like these are the two numbers I'm happy with. So I'm going to rather collect a little bit more credit on this trade, which means a little bit less risk as far as like what I'm losing. Because if it's $2 wide and I collect 97 cents, the most I can lose is 103. I could make this even wider and potentially go, a few dollars out and maybe collect 70 cents. Then I'm risking 130. So again, this is all part of trading. These are the choices I'm making based on kind of where I'm at. So for this trade for tomorrow in SLV, this is what we're doing. A skewed iron condor. We're moving the put side closer, moving the call side further away. We're going to collect a little more credit than normal, assuming this is where it opens up tomorrow, because I'm happy with where these parameters are. So I'm happy with this credit risk reward. And that is our trade in SLV for tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being what is an option. You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.